Hi, fam. Good morning, good afternoon, good evening. Welcome to the second session of the Joseph Say Concept YouTube live happening every Monday. So today, we are so happy to be back here again. We are thankful to God Almighty. We are grateful to Allah. We are back again. All right. So wherever you are joining us from, we just want to say a big thank you for joining the live. So today we are going to talk about the candlestick anatomy, the anatomy of the candlestick or candlestick formation. So for this month, we are trying to lay emphasis on the theoretical aspect so you have like a good foundation. The channel is for beginners, okay? In the race to end poverty. So if we are about to end poverty, we are going to use what the financial markets to end poverty. So today we are going to talk about the anatomy of the candlestick. Okay, the candlestick. So what is a candlestick? A candlestick is a graphical representation that shows how price tend to perform, all right, over a specific period of time. So a candlestick is what? A graphical representation. It shows you the performance of price, what price tends to do for different assets. So now, Mwanisa Homer, all right, Mwanisa Homer is believed to be the godfather of candlestick, a Japanese merchant. All right, back then in the 18th century, they used to like use this candlestick to predict price and the price for rice, all right, in the 18th century. So later in the 19th, then it was moved to the West by Steve Nixon. So today, we are going to talk about this candlestick. If you are going to be a trader, if you want to be profitable, this is going to be very essential for you. You need to know how to read this particular candlestick. Now, candlestick are like the language of the markets, okay? Like, let's say you travel now to a country. Let's say you are based in Nigeria, you're based in Sierra Leone, Ghana, South Africa, Kenya. Big shout out to all of you guys watching. All right, so when you move to a new country, let's say so I moved to South Africa where they have like this Shona. It's going to be what very difficult because I'm not used to English and this our other local dialect in Sierra Leone. So I need to first what understand, all right, the language. Otherwise, it's going to be challenging. So it is the same for the financial market. Now, when you have a clear understanding about this candlestick anatomy or candlestick formation, you are going to be able to use this in all financial markets, the crypto market, the stock market, the currency market, the indices, the static indices market. It is what very relevant. Okay, so whether you are a crypto trader, you are a stock trader, you are a forex trader, just know like this is going to be very helpful for you. Now, apart from you being a beginner, if you stay to the end of this session, I believe you are going to learn one or two new concepts from this. So now you need to be able to interpret. Each candle here is telling you what price is doing. All right, don't just see like this ones as like red candle, green candle. No, there is more into this. This shows you the performance. This is the chart of BTC USD. BTC is Bitcoin, the short form for Bitcoin, so we say BTC. Just for example, we say Joseph to say concept, the short form is going to be JSC. Okay, so now what we are going to do, in as much as you are seeing this chart, I want to have what? I want you guys to have a good foundation. So I'm now going to go take you guys to the whiteboard where I will explain the theoretical aspect. Then we are going to come back here. Then it's going to make what? A whole lot of sense. This candle you are seeing, like you are seeing different kinds of what candles here. This one is having like what long tail or the wick. You are seeing this one with a very big body and all. What are these candles trying to say to you? Are you supposed to enter for a buy? Are you supposed to enter for a sell? So by the end of this life, you are going to be able to know how to read a candlestick. These are stuff that I do teach in my mentorship, but I'm giving you out free. All right, so I'll appreciate if you subscribe. If you have not subscribed, like this video, share the live to others so others are going to join. You have friends that are saying trading is a scam, so it's good for them to be here so they tend to learn new stuff. So just give me like 30 seconds. Let's switch over to the whiteboard. All right, fam. So now I'm going to explain the theoretical aspect to you guys, right? We are going to understand about these candles you are seeing. You need to be able to read them. So let's start with the practical. All right, you being a medical doctor, you need to go to med school first, do some anatomy, basic stuff. At the end of the day, you start doing the practical. So it's going to be the same for this. So let's write. So the candlestick anatomy, the anatomy of the candlestick. So this life is going to be pretty short today because we are just going to cover this topic, and you guys are going to have like homework for me, assignment. I want you guys to like go and open the chart and try to practice. If you don't have like a trading account, the link is going to be in the description of this video by the end of the live. So you create your account and make sure you join our Telegram community. We send setup 2 to 3 setup a week. Okay, so if you don't have cash to pay for mentorship, you'll be able to trade a little and you save to join mentorship. So now, the candlestick anatomy. Let's use, let's see if this marker is going to help out. All right. So I hope like this is like visible, right? The candle. Okay, so now let's take this as our red candle. Okay, we are going to take this as our red candle. But first, part of the body, right? Part of the body, the head, the eye, the nose, the chin. So it's also essential we know part of the candlestick. So this is what we refer to as what candlestick, what I just showed you guys from the screen. So now what you guys are going to do, this is called the upper wick or shadow, or we can also say tail. Okay, the upper wick, or we say shadow or tail, but wick, shadow. All right, then this is going to be the lower wick, shadow, or we say tail. So we now know whenever you tend to see this candle, be it like the red candle, the green candle, this one is called what? The upper wick. All right, this one is the lower wick. Then now when you come to this particular area, this is called the real body, or we say the body. All right, you can just say the body is also fine. Okay, you can also say the body is what? Also fine. So we have three major components or three major parts of this one. We are going to come to the in-depth of each candle. So we have the upper wick, we have the lower wick. Okay, then you have what? The body. So this area is what is being referred to as what? The body of the candlestick. Hope you guys are following up. Okay, hope you guys are following up. So we have the upper wick. So this one here is the upper, this one is the lower, and this area is the body. Very easy. That's step one. So now let's move to our step two. All right, let's move to our step two, and we tend to see what happens next. So now we know the step one. I'm now going to show you what happens. How do you read a candlestick? All right, how do you read a candlestick? You need to be able to know how to read a candlestick. So we are going to go step by step. These are all part of like the mentorship package. So I'm just going to give you guys some of the basics you just need to know. Okay, I'm going to give you guys basics you need to know, but having a mentor is very essential. So now let's go with this. I just hope like this is visible. So let's look at the candle. Let's say this is the red candle. Okay, the red. So bearish candle. Now, what is a bearish candle? A bearish candle is like a sell candle. All right, when the sellers are in control. All right, we say the bears. All right, the bears. All right, the bears are in control. So when the sellers are in control, we say the bears. So this is what? A bearish candle. Whenever we tend to say bearish, it means like what? The sellers are in control. Now, for you to know how to read a candlestick, you have different components. It tells you about the open price. Okay, the open price, the closing price, the close. Okay, we have the high and the low. So what do I mean by this? The component, all right, or the essential or important or vital part of what? A candlestick. It tells you about the open price. Now, you want to know when you read this particular candlestick, this single one, it tells you about it shows you like the price at which that particular candle opens. It also tells you about the price at which that particular candle closes. It also tells you the highest price and the lowest price of that particular candle. So now let's look at this candle. Let's say this is the 1 hour candle. It means for this candle to be fully formed, it's going to take complete 1 hour. So let's say now this is 11. Okay, let's say now this is what? 11. Let's say this is 11 to 12. Okay, so it's going to be 11 a.m. This candle starts forming by 11. It's going to completely form by 12. Okay, so now what is going to happen with this particular one? If for bearish candle, the opening is going to be from the top. Now when we say bearish, it means like what? The sellers are in control. So when the sellers are in control, you are expecting them to push the price to the downside. All right, when the sellers are in control, the candle starts opening from what? The top. It opens from the top, then it drops, it drops, it drops. So a bearish candle, it starts opening. All right, the candle starts forming from the top because the sellers are going to be in control. So when you want to press sell, you are expecting the price to decrease. So for example, from $10 to 9, 9, 8, 7, 6, 5, 4. That's what the price decreasing. So if this is a bearish candle in favor of the sellers, then the opening is going to be at the top. Okay, the candle is going to start forming at the top. So now this is where the candle starts forming. This is the open. Okay, this is what? The open. So let's say at exactly 11 a.m. Sierra Leone time, this is when, let's use BTC. Okay, we are using BTC. Let's say this is the candle of BTC chart. Okay, so at exactly 11 a.m. Sierra Leone time, that's going to be about 12. Just confirm and move with your time zone. So the price opened here. Let's say the price opens at $100. It opens at $100. Okay, so it means like if you want to buy one Bitcoin now, you are going to buy at $100. That's what the current price, at the current market price. If you want to buy now, you are going to buy at $100. One Bitcoin is going to be $100. So the candle opens here. What happens? The sellers try to push this down. Okay, the sellers try to push what? The market down. They continue to push this one down from 100 to 90 to 80. Let's say they push this all the way to the middle here. All right, up, this is visible, right? Okay, so now they push this all the way to this price here. Let's say they were able to take this price to all the way to, let's say, $70. So what did you notice? The price, the sellers were able to push the price from 100 to 70 because this is what? The opening. The price opens here. The candle starts forming here. So it drops from 100 to 90 to what? 80 to 70. And now they are tired. The sellers are now tired. What is now going to happen when the price reaches here? The buyers enter the market. Now, the sellers are not going to just be in full control of the market. Yes, the sellers are not going to be in full control of the market. The sellers are going to try to push the price to the downside, while the buyers are also going to try to push to the upside. So it's going to be like what? A fight. This candle that you are seeing forming, all right? The sellers are pushing the price down, the buyers are trying to push. But at the end of the day, we are going to have what? We are going to have a winner. So in this case, when the candle open at the top, all right, the sellers push the price all the way down. Let's say from 11 to 11.50, 11.20. They were able to push the price from 100 to 70. Now, when the price reaches 70, the sellers have used what? Lot of strength, lot of energy. Now they are what? Tired. They are exhausted. So they are going to take a break. Okay. Then the sellers, the buyers are now going to come in and push the price all the way up. They try to push the price all the way up. So this is the high. So for candlestick, you are going to have what? The open. Now you understand the open, right? You understand the open, the price at which the sellers try to push this down. We are going to talk about the buyers, but for now, let's focus on this bearish candle. So the price opens here. So this is what the open. Okay. Then now we have what? The high. When the sellers are now tired, the buyers enter the market. They try to push this market price all the way up. So let's say 200. Now, don't forget, this is going to happen within the 1 hour because we have different time frame. You have the 1 minute, the 5 minute time frame, the 10 minutes, the 30 minutes, the 1 hour, the 4 hour. But in this example, I am using the 1 hour time frame. So for this candle to completely form, it's going to take what? Complete 1 hour. All right, from 11 to 12. So this candle is still forming. While this by 11, the price opened at $100. Then let's say 11.20, the price was $70. Then by 11.21 to 25, let's say the buyers push the price from this 70, they push it up all the way to $200. Okay? Because the sellers are now resting because they have used what? A lot of energy, a lot of effort to push this from 100 to 70. So now the buyers enter the market from 70 and took the market all the way to 200. Okay, so this one, if I ask from for the price of Bitcoin from this time to this time, let's say 11 a.m. in Sierra Leone time, what is the highest price? The highest is going to be 200. The highest is the high is the price we are in. The buyers were able, the highest price the buyers were able to take this market to. So it's what? 200. It's 200. If I ask what is the opening price, the candle opened at what? $100. Okay, so now the buyers push the price all the way to this particular area, but now they are also tired because they took the market from 70 all the way to 200. So now they are what? Tired. So what's going to happen? The opposite. While the sellers were resting, the buyers took the market from 70 to what? 200. Now it's about time the sellers are going to take over. While the buyers are going to rest, the sellers are now going to take over the market. So they are going to now push the market from this high, then they are going to take the market down to this low. Hope we are following up. All right. Hope we are following up. Please drop one. Let me know if you are following up. Drop one if you are following up. Drop one if you are following up so far. Let me know also where you are joining us from. Just drop your country from Nigeria, from Sierra Leone, from Ghana, from any West African country, East Africa, North Africa, any country, the US, the UK, Japan, Germany. Let us know where you guys are joining us from. Let's know where are they joining us from.
Watching from Ghana, Cyprus.
Okay, just give me the names
So recently, let me start.
from Cyprus. I know Mr. Vincent from Cyprus.
Margaret from Nigeria,
Okay,
Alain from Sierra Leone,
okay,
Dennis from Ghana,
all right,
Mr. Vincent from Cyprus,
all right, okay, all right, good, fam. Thanks for joining the live.
Alain Jalo from Sierra Leone,
Thanks. Ghana, Sierra Leone, Cyprus.
Benetti is from Kenya.
Kenya. Him is Biasi, I think. Yeah.
Harvey is from Ghana.
Okay. Okay.
Abraham from Sierra Leone.
Okay. All right. So we are going. Let me just explain this. Then we now go to the practical aspect. Let's go a little bit fast. Okay. So now, thank you, fam. So we have now what the high. This is the highest price. Now we are going to be having live trade. I'm going to be calling live trade. I just want to what build a foundation for us all. Not about me just saying buy, sell. What you also need to know how to analyze. Okay, you don't want to depend on no one, depend on no man. Okay, so let's just have this foundation. Then we'll be making this money by God's grace, inshallah. So we have what the high. So now the buyers are now tired. What happened? The sellers took this price. Okay, they took this price from 100 from 200 now. They pushed it all the way down here to this low. Okay, they took the price from here and pushed it down to this particular low. Okay, so let's say they took the price from 200. Let's say now this area, let's say 50. Okay, the markers are disturbing us today. All right, let's say 50. So what happened? The buyers took the price to 200. But now what happens now? The sellers push the market from 200 all the way down to 50. All the way down to 50. So if I ask Miss Beatrice, what is the lowest price for Bitcoin around 11 to 12? You are going to say the lowest price is going to be what, $50, because that is how far the sellers were able to push the price. If I ask Mr. Vincent, what is the highest price of Bitcoin between 11 to 12? You are going to say $200. All right. If I say what is the opening price? You are going to say $100. So now, when the sellers push the price all the way down here, say from 200 to down to this particular area, what happens? They are now tired because they took the market from $200. Now the price is $50. They are also tired. The buyers are now going to come in again to try and push this up. Let's say they push this all the way to 60. So this is going to be the close. Okay, this is where the candle tend to close. What do I mean by this? This one you are now seeing like this. This one you are now seeing like this. This is what? The open. This is the $100. Okay, this is the open. This is what? The close, which is going to be $60. So this is the low. This low is going to be $50. So this is the high, which is going to be $200. So far, this is what I'm just like explaining. Okay, this is what I'm just explaining. Now, the price of this particular candle opens at $100. This is exactly 11 a.m. Okay, this is exactly 11 a.m. So if this price opens here at 11 a.m., the sellers were able to push the price all the way down here midway. Okay, then they were tired. Then the buyers pushed the price all the way to this top. So this is the highest price, which is 200. So now they are tired. What happens? The sellers now decided to enter the market and push the price all the way to this bottom from 200 down to what? 50. So now they are also tired. The buyers like, okay, let us try to push this market up. They try to push the market up, but this is where the candle closes at 60. So the opening price is what? $100. The closing price is what? $60. It means what? The sellers dominated because the price was 100, then all of a sudden it closes at 60. It closes at 60. Okay, so this is what we mean by the candlestick anatomy formation for the sellers. This is for the sellers. Okay, we are going to talk about what? The buyers. I'm going to go show you guys this from the chart. I just want to see if you have any question, please drop any question. Just drop them on the chat.
Well, new regions.
Okay.
We have Freeman from Sierra Leone, Ambrose from Sierra Leone, Isabel from Kenya, Ijan from Sierra Leone, Alfred from Kenya, Paul from Sierra Leone, Zainab from Sierra Leone.
Mrs. Ba. Say less, say less, say less. All right. So, any question? If you have questions, drop them. Then I'm gonna go take you guys to the chat. Just hold on. Okay. Any question? Hear me clearly. Hmm? Yeah. All right. So far, now let's pay attention to just this single candle here. Okay. Let's pay attention to just this single candle. So now here, this is the open. Okay, this is where this candle starts opening. The sellers push the price down, but this is what the highest price. All right, this is what the highest price. This one you are seeing here is what the highest. This one you are seeing. This is the wick. Okay, so you can see from here. This is the wick. If we move to this particular candle, all right, this red candle, pay attention here. Okay, pay attention here, please. This is the high. You are seeing this tail this week, and you are seeing also another tail. All right, the wick at the bottom. So this week is what the lowest price. This is the highest price. This one here, the body here is what the open, and this is what the closing of this particular candle. I want you guys to feel free to ask questions. Okay, I want you guys to feel free to ask questions. I just want to make things very easy for you. All right. I don't want to take a lot of time. So this is here what the opening. This is where this candle opens. This is where it closes. Okay. And this is what the high. This is the high. This is for what? The bearish candle. This is for the bearish candle. We are now going to talk about what? The bullish candle. Any question? Any question, please? Okay. Yeah. Any question, fam? Any question? I want you guys to ask questions. I want to be sure, like, yeah, we are following up. Any question at all? So this is what we are going to cover today. The life will be very short. We are also going to come to now the buyers. How do you know, like, this is what a bullish candle? We have bullish, we have bearish. Bullish in favor of what the buyers. You are expecting an increase in price. You are expecting the price to increase in value from 10 to 15 to 20 to 30. When you say bearish, you are expecting a decline of price. Okay, the price is going to what? Decrease. You are expecting it to decrease. Very soon, we are going to put structures in place for like everything to work out well. By next live, let's look forward to some few changes in a good way. So don't forget now, for the component of a candlestick, you have the open candlestick, be it the bullish candlestick or the bearish. It tells you about the opening price, it tells you about the closing price, it shows you the highest price and that of what? The lowest price. So now let's talk about the bullish candle. Any question for me?
No.
I guess you guys are all comfortable, right? You guys are all comfortable. All right. So we are going to be going to live chat, analyzing the chart. Let's just finish up with this. So now let's take this as our bullish candle. Okay, this is the candle you see in green, the green candle you tend to see. So let's just take it like this. So this is our candle. Okay, this is our candle. Now when the buyers are in control, the candle is going to start forming from the top. The opening is going to be from this bottom here. Why? The opening is going to be from the bottom because you are expecting what? Increase in value from 10 to 15 to 20 to 30 to 50. The only difference between the bullish candle and that of the bearish candle is like for the buyers, the candle opens at the bottom, while for the sellers, the candle open at the top. So this is what going to be our opening. Okay, this is going to be our opening, and this is where the candle, you're expecting the candle to close. This is still going to be our low, and this is going to be our high. Okay, so when the buyers are in control, the candle opens from what? The bottom here. So the candle starts from the bottom. Let's say this is $100. So the buyers try to push the price up, let's say up to this point. Let's say they push the price up to $300. So they push the market at exactly 11. The price was what? $100. So, but let's say by 11:50, 11:20, the price now is what? $300. So there is increase, all right, in value. So now when the buyers reach here at the middle, they were tired. Because don't forget, the buyers are not just going to be in control of the market fully, 100%. It's going to be what? A fight. The buyers are going to push like this, while the sellers are going to also push like this. It's going to be like fight. But at the end of the day, there is going to be a winner. Or we are going to have what we call equality, which means neither the buyers nor the sellers are in control of the market. But we are going to come to that. So now, this is what the price opened at $100. Then the buyers were able to push up to like $300. When they got tired, the price moved from this 300 and drop down to what? This low. Okay, it dropped down to what? This low. Let's say this low is what? 50. Okay, let's say this low is what? 50. All right, let's say this low is 50. So now what happens when the sellers push the price from 300 to 50? Then they were tired because imagine taking a price from 300 all the way down to what? 50. It requires what? A lot of momentum, a lot of energy. So now, in as much as they are tired, the buyers now decide to take the market from this low, from this 50, all the way to the high. Yes, all the way to what? The high. They took the market all the way from 50, let's say now to 500. Let's say now to what? 500. Okay, they took the market from what? This 50 here, which was the low. That's the lowest price from 11 a.m. to 12 p.m. What is the lowest price of Bitcoin here? We are going to say 50. What is the opening price? 100. What is the closing price? We don't know because the candle is still forming. We are using the 1 hour time frame. You can use the 30 minutes, you can use the 15 minutes, you can use any time frame. So what happens here? They took the market from 50 all the way to 500. Now they are exhausted. Now they are tired. What is going to happen? The sellers try to enter the market again to push this market to the downside. But this is where the candle closes. Let's say $400. So yes, the buyers what? Took the price all the way up here to 500. So that is the high. The highest price is going to be $500. What is the lowest price? 50. What is the open price? 100. Now, the closing price, the sellers tried to push the market down, but they were not able to push further. The candle closes as 400. So the price of Bitcoin open at $100, closes at what? $400. The low is what? $50, and the highest price is what? $500. The only difference between the bullish and the bearish is where the price opens. When the sellers are in control, the candle open at the top. When the buyers are in control, the candle open from the bottom straight to the top. Okay, bottom, they climb the ladder, they move to the top, while for the sellers, they are coming down the stairs. So that's what a simple scenario. When you are in two-story building, you come down the stairs, right? Those are like the buyers. They are expecting a decrease in price, a decline in price. Okay, so like for example, when the sellers are in control, you climb the stairs, they want to what? Drop. Where the buyers are in control, they are climbing the stairs. Let's say you want to climb the stairs of a two-story building. You are going to climb the stairs, you go to the top, right? So you start from the bottom, you climb to the top. While for the sellers, they are going to come from what? The stairs from the top, they drop from the bottom. So the open for the buyers is at the bottom. Any question, please, fam? Drop one.
Mr. Paul says, what is the important thing to note about the upper and lower wick?
Okay, so now the most important thing to note about the upper and the lower wick. Now, first, if you move to the smart money concept, these areas can serve as area of order block.
People are saying they're not hearing.
Right, it's on.
They are saying they're not hearing.
Let me know if they can hear me, please. Let me know if you guys can hear me well.
Drop one if you can hear.
Please, if you can hear me well, just drop one.
I think they can hear you.
Okay. All right, so let me move back. Let's move back. All right. So the question, what is the importance of the upper and lower way? So first, in a very easy way for beginner level, this point can be serve as what? Point of liquidity. All right. This can serve as point of liquidity. Point of liquidity in the sense we are in, like price have moved, like the buyers, the sellers, the buyers have pushed up to this high. There is possibility, like no matter how the market drops like this, okay, it has what? High chances of what? Market coming here again. This point can also, for this upper wick, can also serve as what? Your point of interest. Okay, where you tend to look for what? Order block or breaker block. But that's like kind of like advanced math money concept, which I'll not jump into. All right, but I'll just give you like the surface. They can serve as what? Point of interest. This one can serve as point of interest, an order block, bullish order block. Okay, the lower wick. This can serve as point of interest, like bearish order block. All right, the bearish order block for the sellers. You want to look for sell opportunity. Yeah. Okay, they just tell you like, okay, high liquidity is going to be in that area. So the buyers, like for example, this high this week, there is possibility of like the market really dropping, but you are expecting what? An increase in value later if buyers enter the market, for them to what? Move all the way to this point here to grab liquidity, to sweep liquidity and drop to the downside, or they break to the upper side.
One more question from Mr. Cody. He says, how to find a confirmation candle to enter for either buy or sell.
Okay, so I think they are moving advanced, but I'll still respond. I will not be able because the markers also. Now, to get confirmation candle, you need to know like the different types of candle. Never pay attention to the color of a candle. This color is red, this color is green. It's not relevant at all. What is now relevant? The body of the candle. You need to know. For example, now for you to have like a confirmation, one of the candles I always tend to use mostly. Okay, I need to work on this marker stuff. So this is going to be the marabuza. Like for example, the bigger the body, the stronger the buying power or the selling power. All right, I pay attention to like the dragonfly. You know the dragonfly, right? The dragonfly, like the letter T, T as in Tanzania. All right, the dragonfly. I'm not going to be explaining the psychology behind the formation of this particular candle. Just do your research, okay? These are stuff that are part of the mentorship. So this is the dragonfly. So now, how do I tend to do confirmation? I tend to look for my pattern. After the pattern, I go in for confirmation. After confirmation, then I can now do my entry. So if the pattern is what? A bullish pattern, try to look for what? A bullish confirmation, then you do your entry. If the pattern is bearish, for example, let's say I'm looking at the bullish engulfing. After the bullish engulfing, you need to know where to look for this particular pattern. All right, mostly in the demand or the support zone. Let's say you have identified the pattern. Does that warrant you to enter the market? No. you need to wait for confirmation. Now, let's say the next candle after the pattern is going to be a bearish candle. Are you required to enter? No. You need to exercise patience until you see what? A bullish candle. So you just do your chart. Bullish candle can be the bullish Marabuza or the bearish Marabuza. All right, the pin bar or the dragonfly. You have the dragonfly, you have the morning star, the evening star, the gravestone. These are all like patterns, but for confirmation, I mostly use dragonfly and the gravestone doji or the bullish and bearish Marabuza candle. Any other question, please?
Yes, how to enter and exit it.
No, oh, that's going to be the next live. That's the topic for the next live. Okay, I'll show you guys how to enter a trade and how to exit a trade.
I think that's it. Let's go.
All right. So, any other question? Any other question, fam? Any other question? So, if no other question, like this is just going to be a preamble. Now, in the next live, what I'll do is like I'll show you guys how to enter a trade, a buy trade, a sell trade. So now you guys have homework for me. Now it's going to be free. You can just send to my Telegram. Don't go to Telegram, please, to chat for me. Okay? After this live, just check this video. All right, after like 10 to 15 minutes, check this video or go to my previous video, check the description section. You are going to see the official Telegram group, or go to Facebook or Instagram or X that used to be Twitter. Send a private message to me, Joseph Sesay Concept, and I'll share the Telegram link to you. What you are going to do, you are going to just like check your phone. Okay, you are going to check your phone, then try to say, okay, this is the opening, this is the close. I'll be able to tell you the mistake. If there's any mistake for free, I'll be able to make corrections for you. Okay, any question, please?
Which scalping is best for beginner? I think that's the next week.
Yeah, all those like entry and all is going to be for like next week. I'll explain about those stuff next week, when to enter for a buy, when to enter for a sell. So if no more question, fam, thanks so much for joining today's live. It's just basic, but we are going to be here again next week, Monday, same time. Okay, 11 a.m. Sierra Leone, 12 p.m. Nigeria. You can convert to your time zone. My Kenyan people, my Nigerian people, Sierra Leone people, like I love you guys. All right, thanks to all those that joined from different region. We are Joseph Sesay Concept, the leading trading platform currently in Sierra Leone. Thank you so much. Till next week again, we'll meet here.